So please, I want us to be very attentive in this class because what I want to teach today is a combination of everything you guys have been watching on the video. If you can get maybe your note, things you jot Forex stuffs in, you can bring it out because I'm going to be going over step by step on how I look for my setup and how you can actually utilize the method as well. I got in on this trade just a while back. I didn't know it has gone this deep. Do we know what discount and premium is? What do we understand by discount and premium? It's a simple concept. The smart money people use it for, is a terminology for them to, we have sellers and buyers, right? The zones where buyers are waiting for to take action is what we call discount. Where the zone the sellers are waiting for the market to come to, for them to then, push the market down, is what we call premium. Each time frame has its own discount and premium. So what can guide you as to how you will figure out what your discount and premium is the Fibonacci. You just need to see a single move, then you try to look at the 50%. You take from the beginning of the move to the end of the move, then from the 50% and below will be your discount, while 50% to the above will be your premium. So let me show us what I mean. I have this volatility trade. Let me use this. I want to tell us how I got into that trade. I've been riding that trade for a while. So let me just use a new chart. I don't want to disturb what I've said so far. So I'm going to use a new chart. I also want to do V10. Let me just take V10. I'm still going to go to currency pairs so that you understand that whatever it is I'm showing you here works everywhere. This is a daily move. From this place, which is the beginning of the move, to this place. It broke this particular low, giving you a signal that it is a downtrend. Now, like I said earlier, for you to know what's the area on that higher time frame move, where you will start looking for buys, and when you will stop looking for buys, and when you will start looking for sells, and when you stop looking for sells, that's where your Fibonacci tool comes in. You will take from the beginning of that move to the end of the move, right? And like I told you, the 50%, maybe we should use yellow. Oh no, yellow is, let's use black, good. So from the beginning of this move to the end of this move, I believe every one of us should be able to use a Fibonacci. From the beginning to the end. I don't want to go too fast because I know some of us are still very new to trading. In trading, we have uptrend and downtrend. Uptrend in the sense that you will have a high, a lower high, higher high, lower high, higher high, lower high, higher high. Downtrend in the sense that a low, lower low, higher low, lower low, higher low, lower low, higher low, lower low. That's all Forex charts does. If you check this, even on the daily time frame, you see it creating new lows, higher low, new lows, higher low, new lows, higher low, new lows. So the concept I want to teach us today that will really help your trading is now on the higher time frame, when it gives you this high, gives a lower high, and breaks a new high, there will be a point here where you will feel like, oh, this thing is about to retrace, to come to the discount. to then push further, right? What some careful traders does is when it breaks this high, they don't want to predict when the pullback will be, because it can be at any point. It can even fake you out here, then push up a little bit more before then retracing. So in order for you not to be caught in that trying to catch a reversal, some people are just going to carefully do their Fibonacci here. Right. What's that? So they are going to do a Fib from the beginning of that move. From the beginning of that move that broke structure here, you know, this is the break of structure here. Right. After it created a high, a lower high, and it broke this one. So what they would do is they are going to make from the beginning of the move to the end of the move. Now they are going to wait patiently for the market to come below that 50%. Right? You know, some people trade support and resistance, whereby where this high ended and it broke, we are expecting the market to come there and respect it. It works. I can tell you for a fact that it works, but you can't rely on support and resistance alone. And this concept I'm teaching you aligns with support and resistance as well. For this example of what I just drew now, you can see the market coming to that 50% exactly, which is where the former high was broken. And sometimes this will come a little bit lower into the more deeper into the discount before moving. So what am I explaining in essence? What I'm saying is you can be, there are two types of ways you can use this. You can be the type that is a risk taker, you take risk more, whereby after you've gotten the break and you see a clear downtrend of retracement on the higher time frame, you can keep looking for sales because you know it's retracing on the higher time frame. On that lower time frame, you can keep looking for sales on the lower time frame until it gets to the 50%. The moment it is past this 50%, you stop looking for sales because then it is now in the discount area. What you should be looking for are buys. This is the strong low of this higher time frame uptrend. Why this is the weak high. Do you know why they call it strong low and weak high? Because it is an higher time frame. It has broken the structure. So in essence, you are still believing your expectation should remain that this is still an higher time frame. You are expecting the market to just retrace a bit and still come and break this. So the expectation for it to come and break this high is why it is the weak high. Now, the expectation that this lower high that pushed this to the top, the expectation that it can't be broken because it is still an uptrend makes it the weak, strong low and makes this the weak high. So you can see it display a weak high here and you have a strong low below. So this weak high means it is still an uptrend. We are expecting this high to be taken out. That is why it writes the word weak high. Strong low means in as much as this is still an uptrend, our expectation remains that this low won't be broken. The moment that strong low is broken, that means there is a change in character of that old trade direction. This weak high, we are expecting it to be taken out. But from the 50% of this Fibonacci to the zero, the moment on the lower time frame, maybe on your 15 minutes, you have seen a real change of character and break of structure. You can keep looking for sales until this thing comes to the 50%. Now, take note, this doesn't work all the time. It works 80% of the time. There are times where the market's volatility is so strong that it will just come to the 38.2% and just keep going up. In those kind of rare scenario, if you keep looking for sales, you can be spiked out. which brings out the number one rule of trading. Any trade, no matter how sure it is, no matter all the confirmations it has given you, no matter all the confluences you've seen, any trade can go against you. Any trade. So, which is why you have to be constant with how much you are risking per trade. You have to be very constant with how much you are risking per trade. So we keep looking for sales because we confirm on the lower time frame that this is actually retracing. The moment it gets to this 50%, we are not looking for sales, because what the market does is at the time like this, when it's very close to the discount, it will create some trap here that will look like a good supply zone. It will come to the discount, then move and clear out all those trap supply zone it has created and keep moving high. I have a perfect example on the trade I just showed you. Yes, I did this smaller time frame. I saw it as a trap very early because, okay, see, it came to the 50%. Can we see? This is the overall trend though. It came from all the way from this low to this high. So it was retracing. Look at what it did. It was coming to this 50% and created a trap right here. You will all agree that everybody will think this broke this low and created this supply zone, right? I think it is more clear on the 1 hour. Let me see. Okay, perfect. Look at that indecisive candle. Can we see it? Everybody, a lot of people will have trade here trying to catch this sell, because some people may still be thinking. Then another trap, it's reason why it made that trap is this demand zone here. It didn't really touch it fully. So a lot of people are still expecting the market to come down. So which is why they would think this is going to hold. But the moment you know that this thing has touched the 50%, you should drop all your sell expectations. Don't get into it. The highest you can do is not to take the trade at all. But if you get into the sell, you are going to be liquidated. So while it is retracing to the discount area, it will create some traps, some supply zones. So sometimes if it creates a supply zone and it has not, I repeat, it has not touched the discount area, you can take it. For instance, this is a good supply zone right here. It broke the low that created this high here and created a good supply zone here, right? All these have not touched our 50%. It is still at 38.2. So this supply zone could have been taken confidently because you know it has not touched the 50%. So we can still keep looking for sales, which is why you would have caught this good sell perfectly. But now, after I did this, it now created another low, created a good supply zone. But this time around, it is now in the discount area, which is why everybody that has this sell here has been liquidated. This is still going to keep going up. I hope we are getting what I'm explaining to us tonight. So you can keep looking for sales in the supply zone above the 50%. But the moment the market has touched your 50% and below, you start looking for buy opportunities. That is when you are now looking for a good change in character, a good demand zone to get in. Then you hold because you know there is a weak high above. The market is going to go to. This trade, this is my weak high here. So the moment I got into this trade, so this was my initial trade. The moment I saw that this trade came to my discount area, it was so close to my demand zone, and I saw the break of this high, right? I marked out this demand zone, expecting the market to come and liquidate this liquidity, trend line liquidity created it. So that was my expectation. But then it broke another high, right? Broke another high and came to this demand zone and respected it. Then that was when I now knew that, oh, this thing is leaving me. So when it now broke another high here, that was when I now got it. And we're riding to the weak high above. So I was confident to start looking for buys because I know this has come to the discounted area. It's as simple as that. I hope my explanation about the uptrend, when you look for buys and when you look for sells, I hope it is very clear with the explanation of the trade I just showed you. When you keep looking for sells and when you stop looking for sells and start looking for buys, you use your fib as your guide. So let's go to these volatility pairs. Let me just. Okay, so this is a very naked trend. So what can we see last year? We have a recent break of structure, right? So this is the strong low, and this is the weak high. Are we together? This is the strong low, and this is the weak high. So this was the previous one that broke structure. This was the strong low, right? And this was the weak high that was recently taken out. So let's follow me. So like I explained earlier, when you take from this low to that high, you can see that the market came below the 50% before moving to break the weak high. Are we together? So from here, when you've confirmed the break here, we could have kept looking for sales all the way to this 50%. And the moment it is now in our discount, we start looking for a good buy to hold on to and hold all the way to the weak high. So let's keep going. So what can we see here, guys? We can see a good supply zone here. When this market was still in our supply area, our supply area. It gave you, I think it's on the 4 hours. It gave a good sell, I think here. Although it wicked it a bit, so you could have gotten in more clearly here because it wicked this a bit before actually breaking down. It would have given you that, I think, on the 5 minutes. Let's check it out. Is it that it is very sure that that trade would have held? No. Okay, good. Can we all see? We have I taken out here, right? We have a break of structure, change in character, whatever you call it. And we have our supply zone here. So the market did not come back for that supply zone until here. So if you are taking the trade and your stop loss was tight, if it has spiked you out there, then go your way. But even if you missed it, if you didn't get it, it did the same thing again before actually going out. Took out this high, broke this low, And came back for what? The supply zone. Are we together? It took out the high here, right? Broke the low here. And came back for this. So let's say you took this trade. It is easier to see now because it has happened, but then we are just in a class, so let's just for learning purpose. So if you just took this and you are targeting that low, you can see what you would have gotten, a good 13 risk to reward. But then, like I said, it's easier to see now. But we could still be looking for that sell because we are still in the premium zone. It is not below the 50%. Are we together? So we could still be, because this low that came here did not get to the 50%. That's why we are still comfortable to be looking for it. But the moment it got to the 50% here, now, let me show you where the trap is. It broke this low here, right? Giving us a good, I think it's on the 30 minutes that we'll see it clearly. Yeah, perfect. We can say this is a supply zone, the last blue candle. We can say this indecisive candle, whatever you choose to say. But what did the market do with them? Took them all out because you were trying to sell after the market has entered the discounted area. But on the other hand, if we are the good one that knows what the market has been doing, this was the last low. So the only problem I have with the confirmation is after the market broke this high here, a very, very small spike up, right? You would have gotten into this trade. Because after the low was taken out, this high was taken out as well. And it came for the demand zone. So now, if you have missed this, you might not have you might have missed the whole trade, because the only time you would have gotten into this trade, if you were waiting for this now, let's say you missed this, and after this new high was now broken, after this new high was now broken, you are now waiting for the market to come here. It didn't come back and just kept going up. The only time you might have gotten the opportunity is after it has liquidated all these people. After it liquidated all these people waiting to sell after the market has entered the discount area. After it took out this high, we have this good demand zone that you might have taken chance of, right? So you keep looking for buy because, and you are confident in the buys you are looking for, because on the higher time frame, the market has gone to the discounted area. Are we following? So the time you will enjoy this and you will make good money from it, the best time you will enjoy it is when you get this trade earlier, when you are in the trade earlier. Imagine you got into this trade earlier. You are able to get in. Let's even say you put the stop loss at that low. Yeah. And where will be your target? That week high above. Yeah. You know it's going to go and take it out. Look at that. You know the market has come to the discounted area. and it's going to target the weak eye because you are still on an uptrend. Are we following, guys? It is as simple as that. So you can see how we came all the way from the daily time frame to find out all this. So now let's take away that. Let's say, so how I got the recent trade I got into. So that's how I've been tracking this trade. I've been following it to the up movement. So this is the latest weak eye we are targeting right now. This was the strong low, right? So let's say you just got into this trade and you are trying to see, how can I join this trade? This is how you mark up. We start from the daily. So I'm going to do this same thing on the currency pair as well, so we can all watch and see. So you come to the 8 hours. What has this market done? Right? Has it entered the discounted area or not? That's a simple question you ask yourself. So from the low, right? From the low all the way to the weak eye, right? What do we see here, guys? Our 50%. Now, let me tell you how I got this trade. After the break of this eye, we have this red candle here. That is our what? Demand zone. If you have used so simple smart money concept, you would have gotten into this trade too. But then some people will be waiting for 61%, 71%. But then 50% and below is your discount area. So let's go to the 4 hours. Some people would have refined this to here, this last red candle. So they are expecting the market to come there. Meanwhile, your 50% is just a bit above it. Are we following? I'm trying to teach you so we don't make that mistake. You get into trade when you need to. So the market doesn't leave you most of the time again. So like I said, let's keep going. Let's say you were checking this trade out maybe around here. Perfect. So let's say, I think I got this sell too. So let me show you the sell. This market, this is the last low. This is the last low that gave us the weak eye. So the market took it out here. I now check my fib. Is this at the 50% yet? I saw that no, it is not. So I could still keep looking for myself, which was why I saw this indecisive candle here. And I took advantage of it. Right? I was able to sell confidently because I know it is still yet. Like I said, this doesn't work 100% of the time. There are few times the market will have so much volatility that it will just come to the 38.2% and keep moving. But it is more likely to keep going down if it has not reached the 50% of the move. That's just what I want you to take out of this whole class. So after it broke the low that created this high, after taking out this high, we saw this good supply zone in the premium. You could still take and go for that. But the moment it touched this 50%, you stop looking for. So just like I explained earlier, some people would have seen another break here. Another break of structure, right? After this was respected. So that would have given you this, my darling, supply zone. Another area, which some people will be waiting for because, it's now like a trend, right? But what did the market do? Smoke them out. It's still like trying to pretend and let them believe this is still going to hold. So a lot of people might have been spiked out. They would have gotten back in after seeing this spike, thinking, oh, it's still going to hold. It just spiked me out, you know? So a lot of people would have re-entered. That's how the market tricks works. Sometimes it can take your money 3-4 times. It will take it first, now let you believe that, oh, I think I was just too early. Let me go in back, stuff like that. But if you know that the bigger target is going for is this weak high, you would not want to sell after it has touched the 50% of the fib. Are we all together? So let's change this color of this one as the trap. So that's the trap right there. And another reason why most people will want to sell this is because, like I said, it has not touched their golden value yet. They are expecting the market to still come maybe here or even here. Let's use this one. It has not really touched that level. It just wicked it. And if you've been trading for a long time, you know that sometimes the market is going to leave you, no matter how careful you are. It's just going to be very close to that your area and start going. You understand? So a lot of sellers here, guys, but is one of the market tricks. So let's keep going. On the 30 minutes, when this market now came to this 50%, this was how I got the trade. I saw this low taken out. That's what you're expecting for. So you can write this down, guys. What you are expecting for in your discount area after the market has gone below your 50%. You want to see something like this week taking out a low. Then after that happens, you want to see a break of that high that gave that load that took out this low. I've taught you this before. If you've been watching the video, I think the confluences video, I told you you want to see a break of a high for buys. You want to see a break of a low, then a break of the high that created the low. I've taught you that. So you want to see a fair value gap, which is this one here. Like I said, sometimes the market is going to leave you and run. So we had this very good demand zone that would have been the perfect way the trade was supposed to go. But trading is not always perfect. No matter how good you are, no matter how perfect you want to put your plan, there are trades like this that is going to leave you behind. It did everything it was supposed to do, except for, in fact, for people to actually wait, it even created a trend line liquidity, which is what we can see here. Created a perfect trend line liquidity. And in a normal circumstance, the market is going to do this. And now this trade is supposed to come here, take out everybody that is waiting here. For some people would have a trade right here in this little red candle, right? Trying to get it. So in a normal trade, the market is supposed to come here, take out the orders here, and now come here to tag you in, clear out all this liquidity, clear out everybody, because especially if you are going to take this, some people are just going to, put this and their stop loss is going to be here, here, or here, right? Yes, they will put it here. So this was supposed to come here, clear it all out, and tag us in here, then start moving up. Are we all together? But it didn't do that. Just left us, which is good. It's okay. Why did I say it's okay? If it goes, no problem. All you have to do is, now you know you are looking for buys, right? You keep following each time it breaks structure. Keep following. It broke structure here. Although I wouldn't have taken this because of this liquidity below it. I wouldn't. So when it was coming here, I wouldn't have taken this trade. But then it now broke another high again. That was when I now took note of this red candle here, this red candle here. And I saw the inducement here. This was this inducement. A lot of people will have trade here as well because it broke a high. I will follow you. A lot of people will have buy setups here as well. So instead of this one we're expecting, it used this one as the inducement to get people into this little demand zone and get going. So we missed it, no problem. So what do? You wait for the next one. Broke it perfectly. What do? Your little candle before the movement started. Right there. Put in your trade and you wait for the market to do its thing. And where would be your target, guys? Where would be your target? So this was where I got in. This was where I got into the trade, and I'm still holding because I know our main target is above here, which is our weak high. Yeah, I'm looking for a good 17.5 risk to reward. So even if you missed that, there was another one here. You had another break here. So let me show you. Let's say you missed that. You had another break here. And a good supply zone, demand zone rather, excuse me. That was another opportunity to get in. If you missed it, then it goes on and on. It keeps breaking high, guys. Keeps breaking highs. And I think this was the last one it has given people to join in for the buy. So you are confident in taking all these buys because the market has crossed to the discounted area from the premium side. If the market is still in the premium side, it can give you all this confirmation as a fake and trap, and it's going to go further down to the discount area before doing whatever it wants to do. So let's do one currency pair. So you guys can know this works currency pairs as well. Okay. Like I was saying, what do we see? From this, see that this was violated, that low. And if we take our Fibonacci from the high of that move to the low, these retracements have not touched this area yet, which is our discounted premium area, because it's a downtrend. So we are still permitted to keep looking for buys, at least for now, on the monthly. Please follow me step by step. Now, you have a lot of supply zones. ahead that the market could target? In fact, there are so many. And if you are going to ask me, I am thinking the one I think the market might come for the most will be this one, because even after this high was taken out, when this low was broken, the market has not filled up this gap right here. So it can use this as inducement before going down. But this is a monthly time frame. It will take years for the market to come in. So you can't wait. So I'm just explaining because you can see something like this even on 15 minutes. So that you just understand that when to see when something is a potential inducement and when it is a real supply zone. So because of the fact that it is above the 50% doesn't mean when it gets there, it has to be the one. It can be any one of the three. But what I'm saying is the fact that it has passed the 50%, right? You can stop looking to buy upward because at any point in time, the market can decide to do what? On against you and keep going along with the trend. Are we together? So that is that about that. So what is the most recent thing we can see here? So let's get to what we are concerned about. So we can agree that this move we can still keep looking for buys for now, at least till this 50%, the market comes to this 50%, then we can stop looking for buys. So this is the last move. This high that took out this liquidity was broken. So we have a break of structure to the upside, right? So this is a strong low. This is a weak high that we are thinking the market might be targeting. Are we together? So, because of that, if we take our Fibonacci from that low all the way to the high, right? As the markets touch our discount area, yes, it came below our 50%, right? Which has confirmed to us that we can start looking for buys that is actually happening right now. So this other block was expected because it is in the discounted area. So after that, what happened? Let's keep going. Very simple analysis, right? Very, very simple. If you keep it simple, it doesn't have to give you any issue. So when it came to the discounted area, when this high on the daily was taken out, break of structure, right? You have this area that has gap. You have imbalance. So this little, my small red candle here that I love so much, give us our demand zone. Was it respected? Let's see. Perfect. The market came back for it. Now, when the market came, let's say you can't even take a daily time frame trade here, right? This was the low. This liquidity, this equal lows was taken out by this one, right? All these three lows were liquidated by this wick. So after it was liquidated, the market broke this high. Can we all see how simple this analysis is? Just follow me. Very easy. If you make it simple, it's going to be simple. So after it broke the high, it gave you what? A very clean demand zone. Again, how do you know if you'll be interested to take this buy? This move on the daily. This was a strong low. This was the weak high. So you can always do this on your chart so that you know what you are targeting and what you are looking for. All together, guys. So take your fib from that low all the way to the high. When the market was retracing, did it go up below the 50%? Yes. So your demand zone was in the discount area, which made it valid. Where is your target? This weak high. So if you got into this trade, you would have rode the trade all the way here and make your good money. So the overall targets of this trade, let's say you got it here, right? If you want to be a swing trader, the only disadvantage about being a swing trader is all these things you are seeing here. You see how many times the market came back to this? You know how much you would have made in all this move. The market will not come back here. It should not go back up again. Come back again. Go back again. In fact, if you are taking all these three trades, you would have made good money 3 times. So it's not worth it. The best thing I just do is I look for a good supply zone I think the market will react to. I know it is going higher, but all these trap supply zone that you see above, the market will use them as a reaction point to go further higher. Look at this perfect one here, right? It's a good supply zone. What did the market do? After this low was taken out, we have that supply zone. The market came there and deceived them as if it was going to hold and did what? Broke it. So it would have been a good profit if I took it here and I ended my trade here. Simple. And I'm out. So that's a way you can do it. But then, so let's continue. I just branched there anyways. All this kind of week you are saying, they are news week, which is why I trade currency pairs less now. I hate when I know what I'm doing, but then one Joel Powell will just say something and will now take my money. And what I know that is happening is still what is happening. But one news just took my money for no reason. I know this is going up, but then what do I need this for? Nothing. So it is really, 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 really painful. So we got this. So this is our new strong low, right? This is our new weak high that we know the market is targeting. Is almost there, by the way. So after this was broken, you have a new demand zone, my brothers and sisters. Are we all following? It gave you all this imbalance, gave you everything you need. This is your inducement right there. To induce people to think this is going to hold, but it didn't. It gave them the fake reaction a bit, but then came down to that real demand zone. So now this is where it can be tricky and it can be so annoying. Imagine you know this is what is going to happen. You now took this trade, right? You took this trade. And what will be your targets, guys? The weak eye, right? Which is here. The weak eye. See what the market did. It was almost at your TP, but then retraced to want to come to this. This is the target though. I can tell you for a fact that on a normal market day without news, after this high was taken out, this little demand zone was what the market was supposed to come for. Right? Just to continue the movement. Just delete this, remove all this. The market was just supposed to come in, then go to the initial target. But because of the news, which is why I hate currency pairs, all this week would have taken out. Let's even say you got into this trade here initially. You can't tell me for a fact that after this trade has moved this far, you wouldn't have moved your stop loss at least to here, because you have a new strong low after this high was broken. You would have moved it to here. So Joel made a statement and the market took your money, now went your direction. It's mentally draining. You understand? All these things I'm doing are very easy, guys. What you need to do is just spend more time on the chat. I recorded this session. I'm going to post it for you guys. And I want you to just sit down and see these things yourself. They are very easy. You can see them yourself too. You can see them yourself. You just need to sit down and see it yourself. So even if you missed all this, after this little high here was taken out by this one, gave you another opportunity down here. This was imbalanced. So that means this our candle here is a good demand zone, which the market respected. And boom, although you would have got almost like you would have here, but then it's still something you could have taken advantage of to get to this target. Now, don't forget, that is not the overall target. The overall target is this. Because we broke this high. So if you were able to find any good demand zone, so like the question you asked, sir, Mr. Harry, after this has completed its stop, it is going to break this high as well. So after breaking the high, we can look if there is no news to find another entry to join this trade right here. So you can all watch out for it. After it has broken it completely, it will use this as an inducement and come for this area. You can give it a little bit of space, and your overall target will be that weak eye. It's as simple as that. So you will always see opportunities to join if you miss one. You just have to be patient. When it's gone, let it go. It will give you another one. I can guarantee that. So this will be the inducement to get into this area. You can even refine it all the way to here if you want. But if you don't want to miss at all, you can keep it here. So after it has broken, the high is going to come. Some people are going to want to get in here, which is the inducement. So it's going to take them out and come all the way down here, tag you in, then continue to the ultimate target, which is the weak high above. So with these few points of mine, I was able to show you that it doesn't just work on volatility pairs, it works on currency pairs as well. The only thing you need to be very careful about is the news. Like I said, if you are trading currency pairs, we'll be looking for buys. You can look to get in on this. This is the ultimate target above here. So a lot of people, all these trap supply zones that have been created will spike people out. It will keep going higher. And I don't have time again. I would have marked up Euro USD. I believe we should be on buys on Euro USD as well. So guys, that's it for this class. Maybe the next weekend again, we'll meet together like this. Thanks for joining in. We'll meet together again next weekend by God's grace. And I'll see you guys later. Bye.